Crypto is something we haven't talked about in absolute ages in the Dennis Who Invest podcast. And you know what? It feels like a good time to begin talking about it now because Bitcoin is close to its all-time high. Obviously, we just want to warn everybody listening to the podcast that it's probably not a good time to get into crypto or add to your crypto bags if you want to make more money in the short term, because this is precisely the point that people start to get hurt. But you know what? And when I say hurt, what I mean is they can lose money very fast. If you have a long-term perspective, it's always a good time to buy crypto, or at least that's what the data has told us. But remember, don't put the family flipping house on it, and don't put the family farm on it either, because it's not that kind of asset. So whilst we're advocates for crypto, we're also advocating a responsible message for crypto, and it's very important to reiterate that once more on the Dennis Invest podcast. I got a really cool guest with me today. Her name is Paulina, and she works for Glassnode, which is a company that specializes in crypto metrics. And some crypto aficionados in the audience may or may not be familiar with Glassnode. I've actually heard of Glassnode before way back in the day, so it's cool to have Paulina with us today. And one thing to remember is, whilst we are talking about crypto, we're going to be talking about the metrics. We're not going to get too technical. And whether you're a crypto fan or a crypto not so fan, and you've yet to dabble in that world, this podcast will be engaging and informative for you. Paulina, how are you?
Great, thank you. Thank you for having me today.
Hey, listen, it's my pleasure. I'm looking forward to learning, like I'm sure a lot of the guests are. Let's talk about, okay, let's keep this super snappy. Why are you a believer with a capital B for Bitcoin in Bitcoin, Paulina? Or maybe you aren't.
Well, it all started back in 2014. I was actually writing my master thesis on the price of Bitcoin, and I was trying to predict the price of Bitcoin on Chinese exchanges, because back in the day, this is where most of the trade was going on. So I really got into it when the price of Bitcoin was sort of $450.
Oh
And guess
man,
what?
those were the days.
Yeah, guess what? I still haven't bought it. I didn't
What?
buy it at that point. I didn't buy it at that point.
Oh,
Um,
plot twist. Anyway.
yeah, and I guess yeah. Since then, I sort of, because I'm a data scientist, so I used to work for big companies like the Big Four, consulting, and so on. Because back in 2014, 2015, the Bitcoin was not really, or in general cryptocurrencies, the term of cryptocurrencies was not very well spread, and not many jobs around it, basically. So I went into IBM first, and actually they did some courses on crypto, which I also attended, but I sort of forgotten about it for many years until just recently, or last year, when I joined Glassnode. And this is where my whole, crypto story just began again. So it was like shocking for me how many things changed, like what happened, like how many other cryptocurrencies, altcoins, stable coins. Also, it was like nice to see this change, and nice to go back into where I really wanted to be originally.
Yeah, because it moves fast, right? Crypto. So that period of time in terms of a hiatus, it's like flipping night and day. I mean, was there even altcoins back in 2013, 14? I think there were some, right? I think 2011, 2012
Maybe,
was
but
altcoins.
it wasn't really like known of. It wasn't really spread. So yeah, I think I really focused on Bitcoin at that point. Ethereum wasn't even a thing back then. So yeah.
You told me something really interesting just before we hit recording this podcast, because you and I were talking about the history of crypto and Bitcoin and everything along those lines. And I said, right, Paulina, we should really be hitting record right now because you and I are just going to talk forever, and then we'll have to go and do the podcast after that, and that might be like an hour or two of us chatting before we actually do anything. So we drew a line under it. We said, right, let's hit record. Let's continue this conversation on the recording. And you were talking about 2013, 2014. And you were saying that one of the big problems with the space back then was that people had their money on crypto exchanges, but they didn't actually have anywhere that they could take it off the crypto exchange, or at least it wasn't common knowledge how that was done. Because now we have hot wallets and cold wallets and everything along those lines. Presumably they had hot wallets, but people just didn't know how to use them back then.
Yes, exactly. And I remember having a lot of conversations with people who were willing to invest or were very interested in Bitcoin, but they didn't, or they just invested some peanuts because they didn't know whether they will be able to withdraw. And including myself, I was one of these people. And now for me, the investment of back then of $400, $500 were still quite a lot given the student budget. So I think all of these things were unclear to everyone. And even if people put the money into the exchange, they haven't withdrawn. Like there wasn't many people who withdrew at that point. So it wasn't, yeah, we didn't know what was going to happen back then.
Well, you know what? It's interesting because that was that was the Mt. Gox era, right? When everybody had their crypto on
Yeah.
Mt. Gox as a platform, which was notorious for getting hacked continuously, which still, how can I say this? The fact that that happened a lot in crypto still echoes to this day insofar as its reputation for people pretty easily
Yeah, they
losing.
started repaying just now, I think back in July, but they postponed it to next year. But it's taken 10 years. So
Wow.
yeah.
I'm surprised that they're even repaying it. I mean, I'm surprised that's even happening. But yeah, it's taken 10 years. It's a good thing that it's happening. But wow, what a length of time to be waiting for your money. That's crazy. The other thing I was gonna say was, I remember in 2012, my friend, he went to buy a Bitcoin because there was some website that he was using and they only accepted payments in Bitcoin. God knows what he's buying. I don't even want to know. But anyway, he was using this website. They only accepted payments in Bitcoin. And I remember he had to go to the train station in Leeds and you had to physically meet with the person to get the Bitcoin, which just doesn't happen nowadays. So anyway, I'm quite interested to the dynamics of that, how that actually worked. But anyway, that's how things were done back then in the crypto space, which is fascinating. Anyway, we said we were going to talk about the metrics of crypto today. And when we say metrics, what we mean is the numbers that it's a good idea to keep an eye on to analyze, because they do have some predictive merit in the market. But we just want to caveat everything that we're about to say, Paulina, with the fact that we want to make it clear to the audience that obviously nothing is 100% predictive in nature, especially whenever it comes to investing. If anybody tries to tell you they can predict the market short term, I would definitely,
They're lying.
that's a big red flag in my opinion. Whenever it comes to somebody's investing knowledge, naturally there's correlations, but it's never going to be 100%. And when I say it's never going to be 100%, I mean it might even be like 20, 30, 40% correlation, something along those lines. So it's important to bear that all in mind.
That's right.
Wunderbar. All right then, should we jump in with the metrics, Paulina?
Sure.
And I think I'll let you take the lead on this because I know a little bit about this world, but obviously this is something that you do day in, day out. So let's say we're talking about crypto investors, so not traders. We're going to park that conversation. Maybe we'll come back to that another day, another time. It's not really my style personally. We're more talking about crypto investors, so people who are buy and hold, and maybe they're just looking for a little bit of an opportune point to enter the market or get a little bit of an edge on everybody else.
Yes, exactly. I think that's a good way of describing it. Basically, what we're trying to show here is some signals or some points to what we think might, impact the price in some way, and where is the right time to actually enter the market, and when is not the right time to enter the market. So I guess just to maybe underline how important this on-chain data is, that if you compare it literally to a survey, like when you create a survey, like if it's scientific or non-scientific, you want to show people's behavior, right? And you can't test the whole population. You just take a snapshot of a population big enough that will show you or illustrate how these people behave. But I guess with on-chain data, that's not the case. We have the whole population. So we see literally all the trades, we see the volumes, we see the number of addresses, active, sending, receiving. So I think that's the actually beauty of this data, that it shows you literally everything. So I think this is just a good thing to underline at the very beginning.
Good stuff. Okay, cool. Well, I imagine there's a little bit of a hierarchy in terms of what signals you would look at. And I get that it's never going to be as discrete as this is the most important number one, this is number two, this is number three. But there's got to be that sort of special category up here. Like these are the biggies, these are the ones to look out for, right?
Yeah, so if you just want to start perhaps from a macro level or the 4-year cycle level, then a lot of people are saying that there is no chance for you to lose, right, within this 4-year cycle between
According
the
to the data,
halvings.
right? Yeah.
Yes.
Historically.
Yeah, exactly. And I think, historically, yes, that's right. But if you look closer to the epochs or the time in between the halving and see what is the return or what is the price or how the price behaves, it's not the same, right? The last two halvings, I think the last halving gave you a 600% increase in the price. The previous halving gave you 2000%, right? So you see the first halving, I'm not even talking about because it's monstrous, it's a big number. But basically this actually shows you that the increase in the price, as the asset matures, the increase of the price is different or is sort of lower. So I think that gives you also an idea that finding the right time to go to, not just, entering anywhere, anytime and just, waiting for that 4-year cycle to pass, but entering at the right time is going to be more and more important. So yeah, that's the 4-year cycle as a macro sort of indicator.
Absolutely. So the halvening is our first macro signal. And
Yes.
what the halvening is for people who are new to the crypto world, that's probably a 20-30 minute explainer in and of itself. But suffice to say, it's the stage at which the supply or creation of new crypto or Bitcoin is halved. That's not quite what it is, but it's something along those lines. So naturally, if you've got like a river and it's flowing and then you halve the flow of the river, there's less water for everybody to go around. So it's more scarce. So the price goes up.
Yeah, exactly. Actually, another thing that you can look at, and I think this is quite relevant in the current market because we are sort of around this range of 70K. We actually hit it yesterday, and it's close to the all-time high again. So I think what you want to know as a signal not to buy actually is if a bunch of people on the previous or from the previous bear markets take fat profits. Because if that actually happens, then this is a signal not to buy. And the way to actually measure it is through coin days destroyed and the realized profit. So actually on the realized profit, you see how many people withdraw or how many people take the profits. And you also want to look at the cohort that has been keeping the coins for quite a long time. So there is some sort of indicator that is called coin days destroyed, which is the number of coin and the number of days since they were last moved. So even that the number of days that they were last moved gets higher, and then the coin days destroyed, and also the number of coins is high, then it gives you a signal that this big smart money is taking the profit is probably not the right time because there might be a change of the direction. So that's when I would not buy.
100%. And that completely makes sense to me. The day that the big guys and girls start selling, well, that's probably a top signal. So that's the wheel, so to speak, right?
Yes, exactly. So that could refer to also whales and how the whales behave on the market.
Oh, I see. So it's not necessarily related to the size of their wallets. It's just pure and simple realized profit on the platform measured on a daily basis or something along those lines.
Yes.
Makes
Yeah,
complete
exactly.
sense.
It's just not the size, it's the number of coins that were last moved. But also, there is some caveats in here because if you look, okay, the realized profit is already profit that is taken, but there's also another sort of angle to it. Like what you can look at is the unrealized profit. So that's the profit that exists but is not realized. So if it's high, then that means, or if it's super high, that means that there's only sellers, right? So that's when you don't want to buy, because people sooner or later are going to sell.
And vice versa, I'm going to say that there's unrealized and realized losses, which are probably more bottom signals.
Yeah. Yes, I think actually realized loss is one of my favorites because it's very brutal. It shows you the price, and it shows you that if the realized loss is very high, then that correlates of when the price dips. These are literally the guys who probably bought at the very top and then just start selling in panicking and selling, thinking that the price is going to go lower, even lower, so I'm going to just sell now. But it turns out that they are at the bottom. So yeah, you can see like those spikes and like very clear signals there that if the realized loss is high, then it correlates with this price drop, and that's when you actually want to enter the market.
Yes, or certainly it's an indicator, one of many. It's a indicator, isn't it? What was I going
Yeah.
to say? And did you say you use Coinbase?
Myself, no, I don't use
Oh,
Coinbase.
sorry. Just to clarify what I just said, in terms of where you're getting this data from, this is from Coinbase. Is that correct?
Actually, that's Glassnode data.
Oh, I see. So it's not from any one exchange in particular. It's across multiple exchanges.
Yes, actually, if you talk about exchanges, then it's a macro signal. I'm not talking about the adjusted realized loss. I'm just talking about as a broad scope, including the exchanges,
I see. Okay,
including everything basically.
got you. Because I thought maybe it was my ears. I thought I heard you say Coinbase earlier, so I assumed the data was from there. Because Coinbase is one of the biggest, and it's one of the
Yes,
biggest platforms.
that's right.
But yeah, and where I was going to go with that is it's also considered an entry level platform for a lot of people. Whereas you have something like Binance for the maybe slightly more experienced user. So where I was going with that was I was going to say that these signals might be particularly pronounced on one particular platform over and above the other because people who are newer to the space, well, they've got shaky hands a lot more. What I mean is they're way more likely to sell, way more likely to take profit rather than to be in it for the long term. But anyway, I don't know if that's something that's relevant or not.
I guess yes, it is relevant, but I would be cautious about one thing actually. If you're saying about exchanges, there is a lot of, so if you do whale watching, then that's probably not the right thing to be doing because there is a lot of comments, and usually it's the people who have the strangest theories, and they are the most loud. That okay, Coinbase moved like that much capital from the exchange, and it happened to go into the specific address, and then you're thinking, oh my god, like there's something happening to Coinbase, that everyone is withdrawing, what is happening, and shall I be withdrawing? And it starts this whole panic around it. But most of the time, and I see it because I was actually dealing with a lot of this data, is that it's an internal transfer. There is some specific patterns to that like a lot of exchanges are using, and it turns out that they just move in between wallets, and that happens a lot with the cold storages or like vaults that they have, because they don't keep it in one specific wallet, but they usually ship the funds in between. So if it was like one thing to say not to do, is probably like whale watching and listening to people on Twitter just saying like strange theories that things happen. Like most of the time, right? There are some situations where there is some withdrawals, but most of the time it's actually internal.
Interesting, because I was the biggest inverted commas whale watcher of all time back in the day. I was like, if the whales are doing it, there must be some logic to it. But you say not so much. Don't pay attention to
Yeah.
them so much.
Yeah, I guess there's one thing is, again, like no one holds the truth. Like you don't know whether this account or this wallet is specifically Coinbase. It's a knowledge based on some sort of analysis, some factors that we take into account, but there is no, except for the proof of reserves that the exchanges are published. Actually, Coinbase is not one of them. They are not sharing it publicly, but most of the exchanges actually are sharing the proof of reserves. So this is exactly what you can trust of how much they store. But if it's just a regular wallet, then yeah, I'll be careful.
Interesting. So the metrics we covered so far, those are the biggies, like the ones we most want to watch. Any more in that category?
Yeah, I guess one interesting index that I actually looked into just recently is called Choppiness Index. So it basically tells you if the market is on a trend or some sort of strong trend, or if it's going sideways. And there's like even a term called chop solidation, which is literally what is happening right now. Because if you're looking at the price in the last few months, it's like literally oscillating around some small range, right? It's not going like literally anywhere. It might change after the elections, but so watch out. But actually, choppiness index is it's nice because you can see when it recharges. So you see when you see the price, and you have like a 0 to 100, and if it's close to 100, then that makes the trading is going sideways. And then once it reaches the high, then it goes back down again. So if the value is closer to 0, then it suggests that a market is in a strong trend. It wouldn't tell you what trend it is. It wouldn't tell you if it's going to go up or is it going to go down. But this is something to just tell you that watch out, there is something coming. I think right now, this choppiness index, if you look at the a moving average, like monthly moving average, it's actually going down. So something might be coming, which everyone is expecting anyway. But I think it's just a nice way of just being prepared that something might be going if the index goes down.
And is that calculated from the price, a bit like a lagging indicator, or some sort of on-chain data?
No, it's a little bit more complicated. I'm not going to go into that, but it's a bit more complicated.
There's a bit more to it. And it's literally called the choppiness index.
Choppiness index.
Choppy, like chop, 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 like that.
Yes. Oh. Yes, the market is chopping, right? It's a chop solidation.
Okay. I like that little portmanteau word you got there. Chop solidation, consolidation plus chop married together. There we go. Anyway, okay, I like that. Cool. So we got chop solidation. That's going to be playing in my head all day now. Anyway, we got the choppiness index. We got unrealized prices and unrealized profits and unrealized losses, and then there was one before that as well. What was that?
Also realized price. Realized profit and coin days destroyed.
Interesting. And outside of those, any more ones that you believe have a good bit of validity to them?
Mm-hmm. Yes, actually, there's one interesting one that I thought might matter in this case is the price drawdown from all-time high. So it's literally the percentage difference from all-time high. And usually what we're seeing, I think, again, this is sort of a strong indicator whether it's a bullish or bearish market, is that if we are below 50% from the all-time high, then I see, based on the data, that usually it's like a trend. So it happens for quite some period of time, and it's more of a bearish market. It's actually interesting because, like, again, from the data, it takes around 700 days to recover from the bearish market. So I think it just gives you, an idea that once you hit this 50% difference, then that's probably gonna last for some time, or if actually it lasts for some time, then it is a bearish market. And you have an idea that is going to last for some time. At the moment, it's actually very close to all-time high, so it's literally a few percent different. And in general, in the bullish market, on average, we'll see 30% drawdown. Right now, in these last days, it was between 10 and 20, right? So it's actually a very, very bullish market right now. We don't know how long it's going to last, but again, it just gives you an idea of the cycles that it comes back and, on and on.
It's an interesting indicator, right? And yeah, we definitely don't want everybody to get the impression where they're going to listen to this podcast and buy their first crypto or jump straight in and go all in or anything along those lines. But it's certainly food for thought. And another thing I would say is, historically, when it gets to this phase of the bull market in a sort of chronological sense, it's usually about September, October, November, December, the latter end of the year that follows the halving, in which things go crazy. But then again, we don't have to look too far back to 2020 when this exact thing was happening. It hit a double top, basically, And I think it just broke through its price. No, it wasn't 2020, it was 2021, wasn't it? That was the last time.
Yeah.
Yeah, I remember. That was the top. And it had like a it died in like July time, the price. And then it rallied straight back up. It made fresh highs just about. And everyone was like, okay, it's gonna go crazy like 2017, 2018, let's go. And it just never quite happened. And
Yeah,
a lot of people got stranded up there. And they're still stranded up there, man, price wise, until like literally today because it's like if you
that's
would have
right.
bought it 69, I think that wasn't it 69,400 and something was the previous all-time high. And obviously right now as we speak it's at like 70K, just over 70,000. So anybody who bought back then is literally just exiting now for a profit if that was their plan the whole time. And we're making this podcast on the 31st of October 2024. So it just shows you how volatile it should be. And we just need to remember that.
But yeah, you also need to remember that, the market changes, right? We had this introduction of the ETFs. Literally since then, the price drawdown was quite low, right? We have a lot of trading going on, a lot of new capital, especially BlackRock in this recent few days. So this last 6 months were really, quite, even though the price is, sort of stable, but there was a lot of relocation of capital, right? So we had Mount Gox was saying, I think they sold so far around 160,000 Bitcoins. We had German government selling around 40,000, but still the price has not gone down, right? There is clearly a demand and there's clearly a lot of relocation of capital, which keeps the price high.
Bullish indeed. Bullish indeed. Paulina, you're a hodler, are you?
I'm all-time hodler, yes.
Diamond hands, I think they call it, right? Where you can
Yeah.
hold on despite everything. When did you make your first entry into crypto in terms of what year was it? Just out of curiosity. Did you say 2014 earlier?
2000, actually 2018.
Oh,
Yeah, I
I
bought
see.
Ethereum then. I bought also IOTA. IOTA was like a very interesting project that literally spiked because Microsoft bought it and then it like never recovered after then. So I
Oh,
made
right. Thanks, Microsoft.
some failures as well, but yeah, since 2018.
Thanks, Microsoft. Yeah, well, I mean, it's interesting, right? Because I mean, with a lot of the altcoins, is in the smaller cryptos, and by altcoins, we're defining that as everything outside of Bitcoin. Some people consider Ethereum an altcoin as well. Sometimes people consider Bitcoin and Ethereum in a category of their own. But whatever somebody
Yeah.
believes, we're talking about the little teeny tiny ones. People, the philosophy is that people just game those most of the time to get more Bitcoin. But by the sounds of it you're a at least you were a long-term believer in IOTA.
Well, yes, I
Maybe still
was,
are.
but again, I think, yeah, I would prefer still the assets that are more mature. So Bitcoin, for example, is sort of a new, safe haven. They consider it as gold, and it seems like, it moves around with the stock market as well. So it seems like sort of, as I'm on the safer side, a safer investment. At the same side, on the other side, actually, there is a lot of, the risk appetite for people as you make profits is growing, and a lot of people are going into altcoins, nowadays, especially just recently, there was a lot more risk takers in the space of altcoins. So maybe one day.
Maybe. And NFTs as well.
Yes, that's another thing. Yeah.
Is that your forte?
No, I don't have any NFTs.
Me neither. Oh no, that's not true. I do actually have some that I made for Dennis Who Invest back in the day, just out of fun. But it was this was back when it was like peak NFT and everybody was getting excited about it. And you know when something, when people are like really euphoric about something, it's probably right as it's just about to crash. So I was like, okay,
That's right.
I'm gonna make these for fun, but I'm gonna give them away for free so that there's no money that changed hands. So yeah, they're called NFT NFTs, which I was rather proud of, non-fungible teeth. I was pretty proud of that back in the day. Anyway, they might make a resurgence, who
Yeah.
knows, on the Dennis Who Invest community sometimes. It would be fun. What I always thought would be fun, it's like with the NFTs, is to give them out to people and they can use them as tickets to events and cool things like that and sell them to each other and what have you.
Yeah, no, it seems like it's sort of a new asset space here. It's, more for like arts, and I'm not really on this part, but it seems like it's promising. But I would like to watch it a little bit more because, in the end of the day, what's the value or what's the price you would like to pay for, something that is on chain, which is like a picture or stuff like this. So you have to be careful, like what you really trust. And if you really trust in the project, but also, if you want to go into this more of sort of risky investment, that it's yeah, probably good to diversify. So you're not putting all your eggs into one basket, because you never know, like, in the project is probably like important, and diversifying as well.
Okay, I'm curious to know, and obviously we just want to caveat this with no financial advice, and this is always going to be a speculative prediction. Naturally, from what we've gathered and from talking to you today, you're a believer in the crypto space. What does the future for crypto look like for you, Paulina? Why do you believe in it so much?
Yeah, that's a very good question. It's like a very, very broad topic. I believe it, and I think there is a lot of people ask me, like, is it even possible if crypto is going to replace the centralized money? And I think we're quite a long way from that. But a good thing is that there is some new developments in this space. For example, there is stable coins. That are gaining a lot of attention, and they are now actually backed up by US treasuries, the short-term treasuries, and they are actually being used by a lot of people in also like poor countries, because they don't trust their own governments or their own central banking. So it seems like there is a future, and the space is like moving super fast. You have to be careful, of course. I mean, if do you want to use it for investment, or do you actually want to use it, to buy a house, right? And I see there is some sort of adoption towards this. El Salvador actually is a good example in that, because they did made a law that is now considering Bitcoin cryptocurrencies as a legal tender. Like how they ended up with it, we don't know so far. I think the story is that they started buying a lot when the price back in a bearish market, and they were criticized a lot because they had to fund it somehow. They had to raise taxes. Like, people literally were affected after that. They had this whole I think application that they developed, which was also hacked. So it wasn't like really a good start. But I think now that the price has gone, it seems like they are moving towards some direction. But yeah, I guess I've been speaking just recently with some sort of agent, and he about properties and whether you can buy properties with crypto. And it seems like it's possible here in Cyprus. It's possible. You can do it. If it's a one-day transaction, then it's if you want to make a one-day transaction, then yeah, that's fine. If not, then it's a little bit more complicated, because what's the value of Bitcoin, right? Like, you have to peg it to something. So if you make this sort of contracts, you still, because it's a volatile asset, still not just Bitcoin, but in general, you have to peg it back to dollar, for example, or to gold. And I think this is something that we're not going to get rid of very, very soon. Again, because of the volatility of this asset class. But I think, 47% of traditional hedge funds hold some crypto already, right? So that tells you something, like that you can legally invest in crypto through the ETFs now. So it seems like the market trusts at least, I'm talking about Bitcoin, but in general, the cryptocurrencies, the technology, blockchain, and so on. And blockchain in general is actually used not just for crypto, but in other places, as a technology that is being introduced. So I think there is slow adoption, and I trust it will progress with time.
If you like crypto, you might also like episode 221 of the Dynasty Invest podcast, in which we interview Benjamin Ahmed, the 13-year-old boy who made £300,000 from creating his own NFT community